Good morning to everyone and thank you for choosing Market Briefing, analysis of today's financial news. Each day, our goal is to provide you with a deep and expert analysis of the most relevant financial news to help you navigate the complex economic landscape. We're pleased to deliver our content every morning, prior to the opening of the U.S. markets, offering you a competitive edge for your trading day. Now, let's begin our daily review. Major developments in international finance, June 2, 2023. Title: International Financial and Market News Update. In the U.S. session, the ADP non-farm employment change data surpassed expectations, indicating a positive impact on the USD. The report showed the addition of 278,000 jobs, exceeding the forecasted value of 173,000 and the previous figure of 291,000. This suggests stronger than expected employment growth in the U.S. Moving on to the Asia session, the market sentiment for the US dollar to Japanese yen pair could be influenced by favorable data from Japan and the US labor data. If Japan's monetary base data shows a decrease of -1.1% as forecasted, it could lead to short-term strengthening of the JPY. However, if the US labor data presents unfavorable figures, it may push the US dollar to Japanese yen pair lower. The support levels to watch are around 138.00 and 138.40, while a successful break above 139.00 could lead to a retest of intraday highs near 140.00. During the Asia session, New Zealand's overseas trade index decreased by -1.5%, meeting expectations. This indicates a potential weakening of the NZD due to reduced trade activity. Conversely, Japan's monetary base decrease of -1.1%, better than the forecasted -1.4%, suggests a possible short-term strengthening of the JPY as it indicates less contraction in the monetary base and potential stimulation of economic activity. Looking ahead to the Europe and US sessions, the euro to US dollar pair could be influenced by the US labor data. A lower than expected labor data set may push the pair towards the round figure resistance at 1.0800. However, if the data is in line with expectations, a retracement towards the 1.0730 support level may occur before attempting a retest of intraday highs around 1.0770. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing, analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Turning our attention to the dollar index, DXY, the forecasted U.S. labor figures include average hourly earnings at 0.3%, non-farm employment change at 193K, and unemployment rate at 3.5%. Slower wage growth and a potential decline in job creation may put downward pressure on the USD, while a slightly higher unemployment rate can weigh on the currency. In the commodity market, gold prices may face downward pressure due to the positive US ADP non-farm employment change data. A strong job market in the US typically strengthens the greenback and decreases the demand for gold. As for the Australian dollar, AUD, with no major news events today, traders will likely rely on previous economic indicators for guidance. The private capital expenditure data showed growth but decreased from the previous quarter, potentially pressuring the AUD. Additionally, stagnant retail sales and a sharp decline in commodity prices raise concerns for the AUD, suggesting a downward trend for the currency. The Kiwi dollar, NZD, could be impacted by the forecasted decline in the overseas trade index, indicating a potential decrease in the value of goods and services traded with New Zealand. This may negatively affect the NZD and suggest a slowdown in international trade activities. In Japan, the monetary base data is expected to show a decrease of -1.4%, which could lead to tightening monetary policy and potentially higher interest rates. This may make the JPY more attractive to foreign investors, although it could also signal a decrease in economic activity. For the euro, EUR, upcoming data releases, including French industrial production and Spanish unemployment change, may influence the currency's strength. Positive outcomes in these data releases could strengthen the euro, while disappointing figures may weaken it. The Swiss franc, CHF, may face downward pressure due to the previously released trade balance and manufacturing PMI data, which indicated a decrease in the trade surplus and a contraction in the manufacturing sector. These factors could negatively impact the Swiss franc. The pound, GBP, could experience mixed trends in the housing market, contraction in manufacturing, and cautious lending, which could influence market sentiment for the currency. As for the Canadian dollar, CAD, the upcoming release of the manufacturing PMI data is expected to show a contraction, potentially impacting the CAD and suggesting a decline in manufacturing activity. In the oil market, factors such as the approval of the debt ceiling bill in the U.S., supply cuts at the OPEC+ meeting, U.S. crude oil stocks, and demand indications from China may continue to impose downward pressure on oil prices. Lastly, the non-farm employment data, set to be released during the U.S. session, will be closely watched by traders. Expectations are for a 193K print in non-farm jobs, and a slight increase in the unemployment rate to 3.5%. In conclusion, we'd like to thank you for watching Market Briefing, analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.